Good evening, Prof. So today we are from Group 2, would like to present about SD Guthrie Berhad, who formerly known as Sign-W Plantation Berhad. So our Group 2 consists of me, Adri, Choi Kayen, Syed Muhammad Isa, and Lai Hong Jo. Our presentation consists of introductions, market structure, competition, demand supply, the effect of COVID-19, elasticity, and finally the conclusion. Let's start with the introduction of the company. Hi everyone. Today we will present about SD Guthrie Berhad, which is the Malaysian largest plantation firm and the world top producer of certified sustainable palm oil. The company has operated in an oligopoly where there's only a few players dominate and the entry barriers are very high due to land, capital and ESG compliance. With over 729,000 hectares of plantations across 5 countries, Guthrie has controlled the full value chain from the plantation to the exports. However, the industry faces growing pressure from the climate risk, labor shortages, and land use policies. In response, Guthrie invests in mechanism, digital monitoring, and sustainable practices to maintain efficiency and resilience.
Okay, now let us look at the market structures of these projects. SD Guthrie is actually a Malaysia-based company that involves around in palm oil plantation of the value chain, starting from plantation to mulling and then to refining, finally towards the trading. As you can see, although you can see some doubling plantation, but it was previously some doubling plantation. Then they have over 500,000 hectares of plants across Malaysia, Indonesia, Papua New Guinea, and also the Solomon Islands. So in the economics, we learn about the market structures, how do we classify whether this company or this firm belongs to which market structure. Let us look into the characteristic and also what are the choices of the market structure. First, we look at perfect competition, monopolistic, oligopoly, and also finally monopoly. They are all categorized by these 5 options, which is the number of firms that are competing with each other, the nature of the products, the entry into the markets, availability of information to the market participant, and also the firm's control over the prices. Then in terms of perfect competition, we can look into the very large number of competitors. The products are mostly undifferentiated, literally close to no barriers to enter, and they have full complete informations available, whether it's on the internet or it's anywhere. And also the firm does not have control over the price. And if it's monopolistic, if it's actually almost similar, but the only differences is actually the differentiated the products, and also there are certain barriers that entry, relatively good information availability, and also a certain amount of control over the price. Then we look at the oligopoly. It actually consists of small numbers of firms competing with each other. Then their products can be undifferentiated or even differentiated. Although we can see a small number of firms competing with each other, the entry to the markets, right, also considered relatively high. The information are likely to be protected by patents, and also in terms of the control over the prices, the firm has a little bit of control, but also limited by the interdependent behavior across the firm. Then let us look also into the monopoly. Monopoly, there's only one firm, unique differentiated products, and also very hard to get in, usually includes the legal restrictions, and also information likely to be protected by the patent, and also has substantial amount of control power over the price. Across finding all the information, we believe that SD Guthrie, right, falls belong the oligopoly market structures, which I will explain in the next slide. The reason why we think that SD Guthrie, right, falls under this oligopolic market structure is because first we look at the number of firms. The number of firms that participate in this crude palm oil, or even we call it the oil plantations products, right, are very limited. We don't see any places like a commercial shop lot or even in the shopping mall itself. The competitors consist of, first thing, IOI group, Genting Plantation, and also Kuala Lumpur Kepong, including also SD Guthrie. So these four are the main players in the market that holds a very big fair amount of market shares. Then we look at the nature of the products. This is actually what we call crude palm oil. So in terms of differentiated level, right, the products are almost similar, which is all the crude palm oil, which is one of the commodity. It's actually chemically similar across all the producers. But when we look at how SD Guthrie stands out, is actually they differentiated their products by certified sustainable palm oil, highlighting in terms of the ethical sourcing and also branded downstream products. Then we look into the third criteria, which is entry to market. To be honest, to produce the palm oil or even to refine the palm oil, right, it requires a lot of barriers. First thing, the capital requirements in terms of money invested in, or in terms of the owning of a land, how many lands you have, hectares of land, right, to even produce the palm oil. Secondly, the yielding of the palm oil, right, generally only start with between third year to the fifth year, which is around here. Then only they can start producing the palm oil. Thirdly, there are also a lot of regulatory compliances to hold it to even start a business of the palm oil. Fourthly, which is the economic skill, you requires a lot of effort, a lot of land and a lot of labors to even achieve the economic of skill in terms of the finding the perfect price and the cost. Then in terms of control over price, although the palm oil prices are influenced by the global commodity markets, right, major players like SDG or Genting or IOI even KLK, right, they can impact the domestic pricing through strategic output decision. So as mentioned above just now, they have a little bit of control of pricing, but also they don't really have like full control over the pricing. Hence, with all this conclude, we decided that SD Guthrie falls under the market of oligopoly. Next, I'll pass on to the next presenter.
Next, we're taking a look of the competition in the industry. Competitors to SD Guthrie includes FGV Holdings, KLK, IR Corporation, and Berhad Plantations. FGV Holdings has a 14% market share and manages a large estate but faces productivity and restructuring challenges. KLK, on the other hand, has 10.3% market share. It's highly diversified with a strong downstream and oil-backed chemical businesses. IR Corporation at 12.9%. They are very efficient and high productivity per hectare with a major downstream presence. Berhad Plantation have 2% market share, however has a smaller scale with a domestic focus and quite limited integration. Moving on to product differentiation, SD Guthrie leverages its immense scale and strategic investment in cutting-edge technology and unparalleled sustainability commitments to establish a distinct competitive edge. On the technology end, pioneering genetic research, the proprietary Genome Select program is a flagship technological differentiator. This advanced breeding platform uses DNA prediction models to develop superior oil palm planting materials. This approach to genetic selection directly translates to higher crop productivity and resilience. Advanced precision agriculture. Implementation of precision agriculture with sophisticated data analytics, remote sensing, and real-time monitoring optimizes every aspect of plantation management. Mechanization, automation, and digitalization (MAD). By emphasizing automating tasks and digitalizing operations, it led to improved operation efficiency, reduced reliance on manual labor, and enhancement in consistency. On sustainability, industry-leading certification and frameworks. Beyond maintaining 100% certification across its vast estate, SD Guthrie operates under a comprehensive Beyond Zero framework that goes beyond mere compliance, embedding sustainability into every vertices. Ambitious climate action, SBTi validated. A standout competitive edge is SD Guthrie's Science-Based Target Initiative validated net zero emissions target. They were the first palm oil company globally to achieve this stringent verification via significant investment in renewable energy. Deforestation-free and traceable supply chain. The level of transparency and responsible sourcing is increasingly demanded by international markets. The commitment by SD Guthrie sets them apart from competitors with less stringent oversight. While peers are moving in a similar direction, SD Guthries' early adoption, scale, and deeper investment give it a first mover advantage in yield, cost efficiency, and access to premium sustainably driven markets. This dual focus in technology and verifiable ESG leadership differentiates its products in the palm oil sector. Next, we'll be covering competitive strategies. First one will be value-based pricing. Premium position. Certified under ISPO, MSPO, and ISPO, SD Guthrie's CSPO allows it to charge a higher margin. Following up on that, client segmentation. It caters to MNCs like Nestle and Unilever, which pay premiums for sustainability and traceability. Buffer against volatility. Integration with SunW Oil's buffer against volatility from crude palm oil pricing through downstream margin capture. Branding as sustainability leader. Pioneer in sustainable palm oil, SD Guthrie widely regarded as a reliable, ethical, and first-moving player, especially in the ESG-conscious markets. Reputation and compliance adhering to sustainability, driving and retaining B2B brand loyalty. Compliance and integrity drives long-term contracts, but also draws and retains institutional investor support over less compliant competitors. Third point, industry-leading traceability systems. End-to-end traceability. SD Guthrie is one of the few with traceability to mill and plantation level across its entire supply chain. Digital monitoring. Uses satellite tracking, geotagging, and blockchain for verifiable compliance, which lead to the third point. Market access. Ensures entry to premium markets such as EU, UK, and North America with strict deforestation and sourcing standards.
Let's deep dive into the SD Guthrie demand and supply. Palm oil is deeply embedded in our daily life, from biscuits to soaps and biodiesels. For SD Guthrie, this represents consistent structural demand. In Malaysia and Indonesia alone, national biodiesel blending mandates like B10, B20, and B40 ensure minimum local usage level. These are not seasonal, they are policy driven. As globally, palm oil consumption rises with the population growth. As sunflower and soybean supplies were disrupted during the recent conflicts, palm oil filled the gaps due to its cost advantage. For India and China, Sunderby remains a top export destinations where palm oil support food securities and manufacturing. With few viable substitute, palm oil demand remain relatively inelastic even during price shift. While demand is strong, palm oil supply is constrained as the Guthrie faces rising fertilizer costs, extreme weather, and policy limit on land expansion. In a response, the company replanted 15,000 hectares in 2024 alone with the genome select clones which mature faster and yield more. The labor shortages were eased through the Project Local, which is a youth training initiative, and mechanization tools like automated collectors and drones. To control the input costs, fertilizer usage is now guided by an AI and satellite data, which reduce the waste and maintain the yield efficiency. And lastly, with the estate of in 5 countries, as the country can stabilize their productions, even though one region is hit by drought or floods. This multi-regional model is a key to their long-term sustainability.
Next, we will look into the effects of COVID-19 pandemic to the demand of the product by SD Guthrie. For pre-pandemic effects for palm oil demand in 2018 to 2019, globally in 2018, world palm oil consumption was around 72 million tons, increasing to nearly 79 million tons in 2019. And in Malaysia, 2019 Malaysia's palm oil output rose to 19.86 million tons, a slight increase from 2018, and exports of palm oil products jumped over 12% by volume. And for SD Guthrie, Malaysian palm oil export volume hit a record high of 18.47 million tons in 2019,
up sharply from about 16.5 million tons in 2018. And for SD Guthrie, they anticipated improved market conditions in 2019. And for palm oil demand during COVID-19 pandemic in 2020 until 2021, globally, global lockdowns in 2020 dramatically reduced fuel usage, and the palm oil price crash in April 2020 made discretionary biodiesel blending uneconomic. And for Malaysia, the Malaysia Palm Oil Board reported that the total palm oil exports in 2020 dropped to 17.37 million tons, down for 6% from 18.47 million tons in 2019. And for SD Guthrie reported that at the pandemic's peak, its business-to-business sales fell, but consumer retail demand for cooking oil remained strong as people cook at home. And by late 2020, SD Guthrie's management observed that palm oil demand has improved and anticipated further growth in 2021. And for post-pandemic trends in 2022 until 2024, globally, palm oil futures reached historic highs of around 7,410 per ton in April 2022. And in Malaysia, palm oil exports in 2022 edged up to 15.71 million tons from 15.56 million tons in 2021. And for SD Guthrie, strong earnings in 2022 due to the unprecedented palm oil prices, despite only marginal increases in sales volume. And based on the SD Guthrie Berhad Performance Index from 2018 until 2023, we can see the trend from 2018 when the pre-pandemic baseline is around 2.0 and going up until high prices for good earnings in 2022, and they caught the stable demand and easing supply in 2023. Next, we will look into price elasticity of the SD Guthrie's product. There are few main factors that determine the price elasticity of demand for palm oil products in Malaysia. Firstly is the availability of substitutes, where the demand for palm oil becomes more price elastic because buyers have viable alternatives. Secondly, necessity versus luxury. Where necessities usually have inelastic demand, consumers will continue to purchase them despite price increases. And thirdly, proportion of income spent. Items that take up a large portion of the budget tend to have more elastic demand because price changes noticeably affect disposable income. And the price elasticity of demand for palm oil products offered by SD Guthrie in Malaysia is generally low, which is inelastic in the short run, owing to the essential nature of palm oil, lack of close substitutes at comparable costs, and strong government interventions that stabilize prices for end users. And for SD Guthrie Berhad, understanding this demand elasticity landscape is crucial for making production and investment decisions. Inelastic demand at home means that the company's Malaysian sales volumes are relatively stable, but it also means that the company cannot significantly increase sales by cutting prices nor greatly reduce sales by raising prices in the domestic market.
In conclusion, SD Guthrie Berhad demonstrate what a future-ready agribusiness looks like. As a vertical integrated market leader, the company balanced cost efficiency, demand resilience, and environmental commitments. Despite climate risks, land limits, and labor shortages, SD Guthrie invests in AI-driven farming, mechanizations, and high-yield replanting to ensure security supply. Its oligopoly positions, combined with inelastic demand and strategic ESG initiatives like carbon credits and solar energy, provide a long-term competitive edge. The company's COVID-era performance proved their adaptability. Going forward, it remains a benchmark for sustainability-led growth in global agriculture. Thank you.